Hey, this has been a very impressive session for several reasons. First, it underscores how explosive this upside will be once we get a vaccine for COVID-19. When that's discovered and approved, we see the sky as being the limit. Second, the broad market shows it can rally without technology. And third, buying begets buying. What I mean by that is before the news was out on Gilead this morning, the market was poised to open much lower. There were no signs of buyers. Now each tick higher forces the hand of other reluctant investors, even those who are bearish. Oil turned slightly higher, helping energy, which was crushed yesterday. The banks are helping financials ahead of big earnings reports next week. So maybe value is going to give another try at rallying. I want to bring in Kingsview Wealth Management CIO, Fox Business contributor Scott Martin, Mahoney Asset Management President Kim Mahoney. Scott, let me start with you. This action in the markets, particularly this huge move in Goldman Sachs and financials ahead of next week. Could we see another attempt to bring value back, led perhaps by bank and energy?
Yeah, some value. Energy, yes, I guess to some degree, Charles, on the big days. I don't know if energy has, let's say, the staying power that I think rallying the financials does. And that's frankly just because the financials earnings picture, which you mentioned starts next week, just looks much better. And if you're looking at the financials coming into next week, I think you got to look at JP Morgan and Citi. Those are two banks we've talked about on your show, two banks we own, Charles, because, I mean, you look at things like loan loss provisions. You look at the fees that they're going to get from all the bond issuance that's coming out, as well as management fees, and also the fact that we have the Fed basically in every part of their business backstopping what they're doing. That's a reason to buy financials here, in my opinion.
All right, I hear Ken saying he can't hear me. Ken, can you hear me? Well, when Ken can hear me, we'll go to him. Scott, in the meantime, I got to ask you, I'm calling it the mother of all short squeezes, right? Only 15 companies have a higher market cap than Tesla, yet Tesla's not in the S&P 500. They reported July 22nd. I think that's going to change everything. Keep this in mind. The stock's up 72% since May 15th. That's when the short interest was 1 million shares more. So 1 million shares less short sent the stock up 72%. I think we could see a $2,000 stock if you see 1 million or 2 shares covered. Am I nuts?
No, you're very wise, as usual, Charles. So you're telling me those kind of numbers suggest the company's had a pretty good couple months, I guess. I'll tell you, you're right about the date that's coming up, because this is a company, Charles, my goodness, a couple years ago, that was maybe going to go bankrupt, wasn't going to be able to pay their debts back, and now is turning the corner on profitability. So you're seeing an event coming up, like you mentioned, with earnings, with Tesla, in my opinion, that are probably going to be so loud that Ken could even hear them at this point, because of the fact you're getting massive delivery numbers out of Tesla. We've seen the Tesla truck, all the things that they've been doing on the ingenuitive side. To me, that's a bet on Elon Musk and the certainly electric vehicle phenomenon that is going on now in the country. And that's why Tesla here, to me, I'm waiting for a pullback to buy it in here, but I think it goes much higher and drives much higher from here.
It's tough to buy the pullbacks. Kim Mahoney, we're talking about Tesla. I'm saying it could be the mother of all short squeezes. $20 billion worth of shorts, the largest short position in the history of mankind. We don't have Ken still. Anyway, it's the largest short position in the history of mankind. And Scott, you talk about buying it on a dip. It was down this morning. It's up 120 points from today's low. I want to talk about another fascinating company, and it's Carnival. The number one percentage gainer in today's session. They came out and said that reservations are actually up for next year. Hey, listen, would you be a buyer here, Scott? Because it looks pretty attractive. If they're right and people are going to start cruising again that soon, maybe the stock is a winner in 6 or 7 months.
Well, okay, so it's not 5 o'clock yet on Friday, so I probably don't have the onions to buy Carnival yet. But I do like the travel stocks, though, Charles. So I do like things like Expedia. I do like the airlines like Southwest. But Carnival, if you're buying it as a trader here, it's going to be a wavy ride because of the fact that the cruise lines, in my opinion, are basically that last bastion of travel to come back. So it could take a little bit longer to recover.
All right. Well, all right, Scott, we got to leave it there. I do want to give you kudos. Gold up 5 weeks in a row. You called it before everyone. Scott taking us out. We're near the highs of the session as I hand it over to my colleague, Liz Claman. Take us up another couple of hundred.